Welcome to this week's video, guys. In this video, we're going to be breaking down smart money technique and how we are going to use it to our advantage. And we're also going to review a trade that I took, which actually hit stop loss, but we're going to review how I took it. We're going to ignore the stop loss. Well, we're not, because we're going to talk about it, but we'll talk about the trade as in an example where maybe you can look to give the trade a bit more room. Okay, so we're going to be looking at smart money techniques, usually around Euro and GU. So we're trading the Euro and the Great British Pound, and we're going to look into it. So the idea with a smart money technique or a divergence, we're going to be mainly looking for divergences. So with an uptrend, we want to see, let's say, for example, this is Euro USD. So we're going to put Euro USD this side, and then we're going to put GU on the other side. So we're just going to do this, and then I'm going to put GBP USD. So these are our two charts that we're going to be looking at. So for a long position, if the market's moving up and we potentially want to see a retracement, we want to see the market moving like so. And then once we kind of come into this level, this is where you want to be looking in for a play. So as you can see, for you guys, you can see that we have higher lows, higher highs, everything like that. And then when we have this higher low being formed, market came up and created a lower high. Okay, so I mean, of course, you're going to have a little bit of price action here, but we're going to highlight that lower high generation and then also have a look at GU at the same time. So smart money technique. And then what we're going to do is copy this just as that, as they are correlated, but we want to see a non-correlation give us this smart money technique that we're looking for. So what we're going to be looking for is GU or EU, again, this can be inverted, to create a higher high. And what this is telling us is that Euro USD has not needed to go swing a level of liquidity. The level of liquidity is at this point of interest here. The level of liquidity is here. And as you can see on this example, GU has swept that liquidity. So therefore, what we're going to do is basically trade it in the regards of being a bearish trend. So if we're in an uptrend and we see a smart money technique, we're going to be looking for shorts. If we're on a downtrend and we see a smart money technique, it could be an indication of a reversal. Because they're correlated, and when they become a divergence, it's no longer correlated. So therefore, maybe, for example, GU might need to go swing that high for the downtrend. And buyers and sellers know this. And when we see this come actual on our charts, then we know that something's going on and we need to take advantage of it. For the downtrend, of course, we're going to be on a downtrend and we're going to be looking for a reversal. And then let's say, for example, we create something like this. So we're going to be looking at these lower lows. And let's say, for example, we copy this, put it on this side. We can see that the market here might create higher low. So there's our divergence there. So we can, we'll leave that as is. So we're going to look at Euro USD and see that Euro USD at this point of interest is creating a smart money technique or a potential lower low on this one. So a smart money technique, and then we have higher lows being created. So we're going to get S&T there as well. So we can see that on EU we have lower lows being formed, but on GU we have higher lows being formed. And this is basically, again, the same level of liquidity. So we have a liquidity sweep by here, and then we don't have a liquidity sweep by here because it wasn't necessary. So GU in this example is the stronger one, and EU is, I guess, the stronger one, but it needed to seek a little bit more liquidity, and GU didn't. So we're going to look at the weaker one. Okay, it's not the weaker one, but we know what we're talking about. So we look for a liquidity sweep on this one, and then if we're creating higher lows on this one, obviously GU strong, EU needed that. So we're going to get better risk to rewards if we're trading around this low, or maybe you look breakout, retest, etc. But we're going to be looking for a reversal if we see this. So now we can go look at this smart money technique that you guys can see on my chart now. This literally happened yesterday. So on the day of recording, this happened on Tuesday. It's currently Wednesday. So as you can see, we have lower highs being formed on EU there. And then if we go look at GU, we can see that we have higher highs, right? So this is clearer on a higher time frame. So if we jump on an hourly time frame, so moving on to the higher time frame, we can clearly see the divergence by here. So you can see that there's lower highs being created and higher highs being created. So therefore, what this is telling us is that the market on GU needed to go swing a level of liquidity where so EU didn't, right? So it didn't go and swing this high and it actually created a lower high. So it failed this level of supply, whereas this one broke it. And what this is telling me is that most people are probably going to be purchasing this buy here. And of course, EU is looking weak. So we're going to look at EU and go, okay, that's really weak. GU is looking really strong, of course, because it's creating higher highs, it's pushing up. We can also tag this in with an area of imbalance maybe. So we can have a look at this imbalance on the left. We can kind of highlight that level as a grab, okay, into that level. And then once we get a mark down, then you could be looking for shorts. I didn't see this when I was trading this, okay? This is a good example of how you should use it. Of course, we have this area of imbalance by here. So, and as you can see, Euro USD already pushed into this one strongly. But when we go to GU, so GBP USD, we can see that it hasn't actually ran into it massively, right? So there's a divergence between the imbalance that was created on the hourly time frame for the both of them. And as you can see, when the smart money technique kicked in, it tapped that level, massive gravestone doji come off that, bearish engulfing off the gravestone. milestone, and then we had a move down, and yeah, it's non-stop. I mean, we have NFP today and unemployment claims, so yeah, that's probably why it's continuously going down. But that's kind of the idea with SMT. I hope this helps. I want you guys to back test it, make sure you're reviewing your trade ideas and implementing this into your trade. And just a quick short video to talk about SMTs and talk about how you potentially implement this if you're trading EU and GU. You can also use divergences and correlations to DXY, which is the dollar index. If you are going to do that, they're supposed to be inverted, so you want them to be inverted. But when they're correlated, that's when something potentially is brewing. Again, potentially, when you see stuff like this, it might just be fake, and then a correction happens, and then the trade is invalidated. Like I said, add elements to this trading strategy and make sure you are bulletproof, and make sure that the trade setup is also having much more confluences. I really hope you enjoyed this video, guys. If you need any more information, please have a look at our website for our challenges, and go look at our Discord for any internal updates that you would like. And I'll see you all in the next video.